Welcome to the September 1st, 2019 weekly coaching call for Investing Accelerator. So this week we have the same list of disasters. Nothing's happening too much. The stock market is going up. And we have a coaching call question from Nancy, a couple of stock picks from Nancy and also from Daniel. And I also want to go through one of my recent holdings, Activision and Blizzard. Okay, so let's get started. Could you explain further about candlestick and the pin bar and what it means and what to look for? I'm not sure I see the trend for pin bar and price turning around. So great question, Nancy. So let's start with this. So let's start with a good stock. Let's do this one, which is Cisco Systems. And candlestick, really, if you follow the instruction, white candlesticks means the price is going up. And if I zoom in, so let's say here, I'm talking about this one in particular, that means if you are using a weekly chart, the beginning here, that means it started at $43 and at the end of the week, right here, it ended at $44.99. Okay, so that's what a white candlestick means. It means it's going up. So if it is going down, then this is $45, the start of the week, and the end of the week, which is right here, $41.88. Now, when you are looking for pin bars, you're really looking for trend reversals. So just to refresh your memory on what is a pin bar, I have an image here of a pin bar. It's basically you have a very, very small box and a very, very large wick. This is what it's called. It's called a wick. And whenever you see wicks, it means it's a sign of weakness, whether it is a top or a bottom. So let me go back to the chart and explain to you. So for example, you'll see that there's not a lot of wicks here. And then as you get to the top, you'll see that there's more wicks here. So you see two pin bars and then the stock price start going down. And here you'll see that there's two wicks here. And then you see the stock price is going up. So you see that these two wicks and these two wicks signals the beginning and the ending of the trend. And now, when you are looking at an uptrend, right? You only want to be looking at wicks that are at the bottom to signal for a resume of the uptrend. Because chances are you'll find kind of like pin bars like these, but then the trend is not really ending. And when you have an uptrend, it is impossible to predict the top because it's an uptrend. So over time, the price is increasing. So for example, if you are investing in Cisco System, which is actually one of the stocks that Daniel Folkman chose, then you'll be looking for something like this. These two wicks will give you the signal to enter into the market or start doing research in this case. Okay, so that is really pin bar. And in terms of candlestick, the box, which is the size of the candlestick you see here, represents the strength. So when you see that there's a lot of boxes, it means that the market is strong and going up. And when you see a lot of black boxes, it means the market is going down and you want to wait a bit to see wicks. And which means the market is softening and slowing down. Now, one great example is Southwest Airline, okay, which is one of my holdings. Okay, great, perfect. So Southwest Airline, which is one of my holdings, and you'll see that the market kind of have a lot of wicks in this place, and you can see that the price is clustered around here for 4 weeks, forming a top, and then it start coming down. And it start coming down again, and you'll see that there's a lot of wicks here, and the price is slowly softening in terms of its momentum and forming a bottom here. And you'll see that there are two blue lines here, which is exactly where I entered. When you see that there's a lot of wicks, and it is at a bottom, it is cheap, and it's near the 100-200 EMA, and this signals forming a bottom, and you can see that this bottom has been forming for like 6, 7, 8, 9, 10, 11, 12 weeks. Around 10 to 12 weeks. So this gives you plenty of time to enter into the market and take advantage of the uptrend here. So that is really what you're looking for in terms of pin bar and candlestick. And when you talk about the trend, you're really just going back into the default. And you want to see that price is above the red line and the blue line. If you see that the price is above the red line and the blue line, then you have a trend. And if you see that the price is starting from the left bottom corner to the right upper corner, then you have a trend. You don't need to look at the candlestick or the pin bars to see it. It's just a simple big picture observation. So here's another example. Alibaba. So Alibaba, you'll see that price is starting from the bottom left corner to the upper right corner. Boom, that's a trend. Price is above the red line generally and above the blue line all the time. Trend. So you want to keep it very simple because it only takes you a few seconds to identify a trend. If you don't see it, chances are there isn't a trend. So let me go to another example here. So Baidu. Now Baidu, this one is really tricky because you can see that it used to have an uptrend, but recently the stock price has been going down and dipped below the red and the blue line. And this is usually a danger sign. So in this case, you want to avoid Baidu because you don't know how long this downtrend is going to last. And for Chinese companies, it's usually much harder to trade the stock because they have a lot of accounting issues in terms of their financial statements. They might misstate their financial statements a lot. So then that's why if you see this, you see that the price is not at the bottom corner, it's kind of here, and you see that right now the price is at the bottom corner, right bottom corner, then you see it, that's a downtrend. Let's find another example that's a downtrend. Usually when I have a downtrend, I delete the stock. So the Dutch. Bank. There was a poor performing bank that has a downtrend. I forgot what it's called. So, actually, I think I have it here. So, the Dutch bank laid off 18,000 people. So if I go here, and I go to check out the bank, and you'll see that this is a clear downtrend. How do I know that? Price is always below the red and the blue line, and you'll see that the price is starting from the upper right left corner and going to the right bottom corner. If you invest in this stock, the chance of you succeeding is really low because time is against you. The more you invest in this stock, the lower it goes. So this is what you want to avoid. And for example, Cisco is what you want to invest in. And you got to do more research, but yes. So this is a good trend. And you can see that right now the Bollinger Band is expanding. And you can right now see that the stock price is dropping quite quickly. You can see that there's a lot of momentum because of this one and this candle. So then it means that the bottom hasn't formed yet. Now historically, if you look at Cisco, the behavior is that it doesn't really dip into the blue area. So then there are two instances where it dips into the blue area, maybe three. So chances are you will be looking to enter somewhere between 46 if you really want to invest in this stock to $40. And of course, you got to do the full research first before you invest in this stock. And because you know that there is a bottom here, okay? You know that it hasn't formed a bottom yet. And if you look at previous bottoms, for example, this one is 3, 6, 7, 8, 9, 10, 11, 12, 13 weeks here. So that means you have a 6 to 13 weeks window. This one is a little bit shorter. There's only 4 weeks to enter into this stock. And I don't think the bottom has started yet. So you might start counting when it is in this 44, 45 range for a bottom. But of course, you need to understand why Cisco is dropping in the first place. Okay, so that should answer your question in terms of what pin bar is. And when you think about psychologically what pin bar is, okay, if you think about psychologically what pin bar is that I start, somewhere, let's say I start at $10, okay, and then the short sellers sell the stock, and it's sold all the way down to $8, and within the same week, buyers start buying it back to $10. So at the end of the day, there's a lot of range, which is the wick, for the week, but then the amounts of buyers and sellers are the same. So that's why the box is really small. Because if I only have sellers for that week, then it will be a large candle, and it will start at 10 and end at 8. And if I have a lot of buyers that week, it will start at 8 and end at 10. So when you combine both of them together, then you get a week where it's starting at 10, it dropped a lot and came back up, and it's ending at 10. So that's really the psychology of a pin bar, and that's why it signals trend reversal. And you can see that when you're using a weekly chart, it's very clear, like this one, these are good ones. These are good ones, but then you don't want to be trading it because the trend is up. Let me find you another example. So you can see that this is actually a pin bar for going down. So then you don't want to be trading, you don't want to be buying when you see this pin bar because it reacted to this support and it shows that 3M is going down. For Activision and Blizzard, you can see that this is quite a good signal. You can see that this is a pin bar, and then afterwards price is actually not dipping below $39.81. Now this is not as perfect as some of the ones I showed you earlier, but nevertheless, it has a long wick. So for example, here you'll see that EA has a very strong pin bar here. So let me move my mouse away. So during this week, you'll see a very strong pin bar there. And then you'll see that afterwards, price actually doesn't dip below the 77 mark. So that's why it's so important when you're using options to place your strike price maybe below this pin bar, because you know that price will have a lot of trouble getting down below this part. Okay? Let's see if I can find you another one. So there are some more advanced ones, because once you understand the concept of a pin bar, which is, let's say 100 sellers sells and 100 buyers buy, and then in the end you get a net zero, but you have a lot of range, right? And this can also happen in the span of 2 weeks. And for Southwest Airlines, you can see that right here, you have a very strong sell week, and the next week you have a very strong buy week. So net together, these 2 weeks is actually a pin bar, but this is really advanced because you need to look at 2 weeks together in order to understand that that is a pin bar. Yeah, so that's what these 2 weeks are about. And if you look at this one, this is not as good of a pin bar, but then you can still count it because it has a very long wick here. And let's see if there's another one. Yeah, I think those are a couple of examples that allows you to understand what is a pin bar quickly. What you're really looking for is just the wick. And that allows you to see whether the trend is forming a bottom, so then you can buy. Okay? All right, Nancy. So you submitted a couple of stocks, which is ILMN. Let's see what that is. Illumina. Okay, gotta work on my pronunciation. And if you look at this 3 stocks, let's start with technical analysis. And I think you pick really great stocks that are currently on discount, and that's fantastic. So if I look at this, you see a very strong trend. Now historically, price does dip to the blue region, so then you got to keep that in mind. And right now, price is dropping. You see that there's a very strong momentum drop here, and you can see that the Bollinger Band is expanding. Now what does it mean? If you see a stock that is getting close to the blue line historically and forming a bottom, and you can see that price is kind of inching lower, then that means you can wait and you might be able to get in at a good price, maybe at a 260 or even 250. Now my guess is that chances are it will get to 250 for a short period of time, and this gives you a significant advantage because you will be buying at a discount. Now between 250, which is right here, and 280, I think you can wait and see if you will be able to enter 3 positions. So separate your position into 3 and enter something like this. One at 275, one at 260, and one at 250 if you are really aggressive. So that means as price is dropping, you have 3 areas which you can enter, and that allows you to get an average price of around 260, which is fantastic. Now, if you think the price is still going to drop and the issue hasn't resolved yet, then don't enter at 276 right now. Just kind of wait for the 260 mark. Now, when you're looking at this stock chart, you will see that the previous bottom, which is right here, is 276. So there is a possibility that it is going to form a bottom at 276. But then, given that there's such a sharp drop in July, I think it's going to break through and give you a better price. So right now in my mind, I think this is around 50-50. 50% chance that it will be forming a bottom here, and a 50% chance that it will actually get to the blue line. But either way, I think this stock is going to go on discount really soon, so you want to make sure you watch it on a weekly basis. So we're going to do a little bit more in-depth analysis on this stock. All right, ALGN. So for ALGN, Again, a great trend. I think you're really good at identifying the trend. And right now, this stock is going on a discount. Again, you'll see that the Bollinger Band is expanding, and you can see there's a very sharp drop here. So that means it wouldn't go back right away, and chances are it will form something like a W here, and then that will give you plenty of time to enter into the market. So for example, if I look at the previous bottom, you'll see that the previous bottom was $183, and I think that you need to look at why it is dropping here, and then you want to wait for a bottom to form. So right now, if you think that this is the bottom, then this is the third week of the bottom. So 1, 2, 3, this is the third week. So that means you have around 6 to 12 weeks left for this bottom to form. So you still have quite a bit of time to enter into the market. Now, we'll do our full research in a bit, but I'm just going through these 3 stocks, so then we give you an idea of what's happening. Now, for Corning, so you'll see that the trend is not as strong, right? But there's still a positive trend. And then you'll see that there are multiple dips here. So if you look at the support, you'll see that support is around $26. And right now the price is really close to $26 and also near the blue line. Now historically, you'll see that it does dip below the blue line a little bit. So you want to be careful. And you right now see that the Bollinger Band is expanding. So I think the bottom will take a little bit of time to form. And right now, if you're looking at this bottom, it's the third week. And right now, if you look at it 5 weeks ago, there's a sharp drop. So I think chances are it will form a W here before it starts to go up again. Okay, so that's the brief analysis in terms of technical analysis for all 3 stocks. So let's tackle them one by one. So ILMN went down due to slow growth and disappointing performance in Q2. Also concerns over acquisition of Pacific Biosciences not going through. And ILMN's DNA sequence technology is favored within the industry. They're taken over by a massive site in Foster City, California, and recruiting talent and investing in R&D. New product launches could bring the stock price back up. Great. So for Nancy, do you know when the new products are going to be launched? Because if you know, then you want to invest in the company 3 to 6 months early. All right. So let's look at Illumina. Illumina. Okay. I don't know why I keep adding the "ni" within the company name. Anyways, so it's an American company. It does genetics. It's biomedical, sequencing, genotyping, gene expression, so on and so forth in San Diego, California. Okay, so if you choose this company, that means you know this company quite well. So I assume you have a certain degree of knowledge in this company, especially in the biomedical field. And you think that this company is great. So let's look at the insider analysis. And that is usually what we start off with because it's the easiest and the most obvious to understand. And if I look at it, let me just refresh. I was kind of gathering these websites last night. You'll see that right now the CTO and the senior vice president is dumping the stock. And you'll see that on August 15th, which is 2 weeks ago, this person has been dumping the stock as $285. So let me go back. So $2 million worth of stock at $285, okay? Which is right around here, which is not too long ago. Okay? And then afterwards, you see that the director J dumped $1 million at $288. And then Senior Vice President Marketing and Strategy Planning, Global Quality Operations, President and CEO are all dumping the stocks in August. Okay, you can see that it's around $300 to $285. Okay, $300 to $285, and then you'll see the director is dumping again at $305, $305, $300. Okay, so basically from July 15th, that's all we can see, July onwards, they have been dumping the stock continuously. So here, July onwards. So from this point onwards, you know what the funny thing is actually they dumped the stock after the drop. I'm sure they were dumping the stock before the drop too. So 305 here. They have been dumping the stock consistently for the last 6-7 weeks or so. So this actually gives you a red flag because it's not just the CEO, but a lot of the senior management are dumping the stock. Now here's the interesting thing. What is the derivative / non-derivative transaction at $69 per share? Now, I actually think that this is a short sell transaction instead of a buy, because if you see a person dumping like 2 million worth of stock, I don't think this person is going to go buy back 500,000 of options. So I think that's a short sell. And if you see this, I think it's also a short sell. So I think in both situations, the CTO is selling the company's stock. And like you said, this is a biomedical company. So I think the most important people within the company are A, the CEO, who is dumping the stock at around this price range. You can see B, the CTO, who's also governing the company, dumping the stock, and he's dumping quite a bit. And the only person we don't see dumping the stock is the CFO. And usually the CFO knows the numbers the best, but in this case, 2 out of 3 are actually dumping the stock, so I'll consider that a red flag. All right. So let's look at the ratios for Illumina. So just give me a minute here. So I jump over to Illumina. Okay, ratios. So when you're looking at ratios, really quick here, overvalued, 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 overvalued. So, undervalued in this one. So most of them are overvalued, so another red flag. Okay, let's look at financials. So because we have insider red flags, that means if you want to invest in this stock, you definitely don't want to be entering at 285. So you want to wait for a lower price. So the next level of pricing is around 250 or so. So that means because the Bollinger Band is expanding, the odds of it going lower is really high. You'll see that it will take a while to form a bottom. You'll see that this strong down move should create a bottom that is around, is breaking through this support. And that means you can aim for a lower price because management is still selling here. I was expecting them to be selling at 370 when it is the highest, but it seems like they just keep selling after the drop here. So management themselves are not even that confident. And in terms of ratios, they're all very high. Now the company is growing in terms of sales. This is fantastic. And then let's take a look at net income. Net income is also growing, which is fantastic. So I think what you mentioned was that the quarterly results was not that good. So let's take a look. So for quarterly results, you'll see that it is growing only a little bit when you compare the 2 June quarters. And you can see that March, it's kind of dropping. I don't know if this stock actually has a seasonality, given that it's biomedical. And if I look at it below, you'll see that net income is actually improving. Net income is improving. Let's see. And you can see that gross income is actually a disimprovement, but net income only improved because there's some unusual expense here. That is a gain. So this is non-recurring. So if I take this out and I don't include the unusual expense here because it's usually only one time, then you actually have a lower net income, maybe around 196 if you take out this 102, 194 in this case, which is lower than the net income here. And that's why they have been selling the stock, because this unusual expense kind of caused an increase in net income, which is only a one-time thing, so it's not really permanent. And if I look at quarterly financials, you'll see that they have cash, which is fantastic. There's property, plant, and equipment. That's fine. There is an increase here from 1 to 1.4 billion. I want you to take a look to see if there is an acquisition, because you mentioned that the acquisition might not be going through, so it might be something else. So you can just do a little bit of research, and you have quite a bit of time, so I'm not too worried. And here you'll see that there's no intangible assets, which means this might be a purchase of a factory or so on. All right, then we look at debt to equity, which is 2.6 billion in terms of liabilities, and then equity is 4.3. So you have a debt to equity ratio of actually less than 1 to 1, is around 0.5. So 2.64 divided by 4.33, so 0.6, which is fantastic. So I think this company, from a financial balance sheet perspective, is really strong. The company is growing, and I think the Q2 performance issue is only temporary. Now, based on the ratios and the insider, right now is still not a good time to enter, and I think that you can wait for a cheaper price. So looking at this, and if we just want to project into the future, then I think in the next 6 weeks to 12 weeks, maybe 3 to 6 months, maybe in October or so, you will get a cheaper price to enter near 260 and 250. And I think at that point, we can revisit and see if management is still selling the stock. If they stop selling the stock, then I think you can enter. But if they are still selling the stock, then we want to wait for a clear bottom to form. And a clear bottom is something like this. So the price has been hovering within a certain range for a long time. Okay, so I think we'll come back and revisit this stock when it is cheaper. And if you really want to invest, you can invest in the stock at this price, maybe only 1/3 or less in terms of your position. And you can actually put your strike price somewhere below the blue line here. Okay, that's what you'll be aiming for, because you want to be conservative, but you want to be prepared that you need to wait through the entire bottom, because right now the bottom hasn't even started yet. So I think this is still too early to invest. Okay, your next stock, ALGN. So again, insider action. Align Technology. Whoops. Okay, I'm just going to type it over there. ALGN. Now, Align Technology right now is dipped below the blue line, which means that it might give you a good price, which it might be cheap, but then the Bollinger Band is expanding, so I think it will take a little bit of time to form a bottom. So let's start with insider. So right now you'll see that the director Joseph and Andrea are dumping the stock. That is around 2.5 million. You see that there's some acquisition of share by Annie, which is insignificant compared to the amounts they're dumping. And you can see that Joseph, again, is dumping another 2.7 million, another 2.7 million, so that's around 5 million. So this is around 7.5 million. And you can see that some people are actually getting shares at around $188 to $199. So this Joseph, CEO, oh, there are two Josephs here. One is Hogan and one is Lacob, is actually buying 1 million of stocks in the open market, which is actually quite interesting. So you can see that you're getting a mixed signal here. So this guy was buying early August. So let's see what the price is. 188 early August, which is just right here. And you can see that the director is dumping the stock at 177, which is actually at a historical low. So you can obviously see that the director doesn't really have an information advantage because he's dumping the stock at a low. Okay. So I think you're getting a mixed signal here, which makes this stock a little bit harder to interpret. So I think it's important to understand why it is dropping. So let's see if we can find out why. So let's see if you have the reason. So you haven't written down the reason, so I guess we'll have to Google this. July 2019. All right. Okay, so I think this is the article we're looking for, so let me just quickly read it. So it plunged, but then it actually beat the results. Oh, so Align is Invisalign, eh? Interesting. I actually really like Invisalign. I think it's a great idea. So the case shipments was below expectation, hurt by softness in China and slower growth in younger adult category in North America. Interesting. So it's mainly impacted by the China economy. So I think in order to interpret Align technology, I think it's growing rapidly, but I think you need to develop a view for China and understand whether China is doing well or not. Because this company's performance is going to be influenced a lot by China. Okay, so let's look at the financials. So sales and revenue obviously growing on an annual basis. Let's see if they're making net income. Net income is growing. You can see that it almost tripled over the period of 5 years. So that's great. So sales revenue, again, increasing, and you can see that compared to last June, it's increasing. And I think the reason why it's dropping is because the CEO said that for Q3, you need to be more conservative. Wow, that's actually very interesting. Okay, I'm putting this together now. So given the uncertainty in China, our outlook for the third quarter reflects a more cautious view for the growth in the Asia-Pacific region, right? So this is August 2019. And if I go back here and I look at the insiders, and I go in here, scroll down a little bit, you'll see that the CEO actually acquired the stock August 2nd, 2019 at $199. So you can see that at $199, the CEO is actually supportive of the stock, which is shortly after the big drop. So you can see that the CEO is obviously incentivized to make the stock price go higher. Second, he's setting a lower expectation for the investors. So then in Q3, he can beat the budget or beat the expectation. And then afterwards, you can see that this is at the bottom. So the CEO knows that the previous bottom is at $180, $190. So he's buying near the bottom. So, okay, yeah. So here's an interesting thing I know about China because I live really close to it. So China actually has very poor dental health habits. So I think there are a lot of people that are not so educated because they're still a developing country, in my opinion, and they don't really care about their dental health. But in the recent years, they start to care a lot more. And I think Invisalign has a huge market. Even I think just dentistry in general has a huge market because people don't take care of their teeth. So I think in terms of the growth of Invisalign in the China market is definitely positive. But because the China market is slowing down, it's being hit by the tariffs and so on. So that means if you think that Align technology is going to do better, then you must develop a positive view of the company and China. And that China is going to be doing well in 2020. Because right now for the last 12 months, there's basically the trade war going on. And it's really not helping China at all. Even though in news, China is always claiming that it's fine, but it's really not fine. So, okay. All right, so in terms of quarterly financial, I was looking at it, it's growing June to June. And you can see that it's growing June to June. So I think it's fine. I think we should look at the ratios. So let's look at balance sheet as well. So ratios, I'm going to skip over here. ALGN. So in terms of balance sheet, you'll see that there's cash growing, AR growing, net property, plant, and equipment wow, this is actually growing a lot faster than I expected, but okay. So I don't think revenue has 5 times, but you can see that property, plant, and equipment has 5 times. And intangible assets is flat, so that's fine. And then afterwards, you'll see that total liabilities is 800 million, and total equity is 1.25 billion. So again, the debt to equity ratio is fantastic. So I think good job, Nancy, in finding these companies. And I suppose you have a good understanding of biomedical companies. So again, it's 0.6. So I think that's fantastic. Yeah. I think you're really good in finding the stocks. So it's just a matter of timing. So PE ratio is lower, 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 and higher. So I think you're getting a slightly mixed signal here, but I wouldn't be too concerned because this company itself is very strong, and I think the business model is very strong. And if you look at how Align Technology works, is that you sign up for your Invisalign, and then afterwards you get multiple models of it over time. So there's a recurring revenue aspect, because once you start doing it, you got to do it for a year or two, and you get like a new mold every 3 months, I think. I don't have it, but my wife has it, so I know a little bit about that part. Okay, so let's do the valuation ratios calculator. So right now the price is 183. So let's see what is the potential increase. And I think that it will take some time to form a bottom, so you have time to enter the market. But yeah, so 35.48, 60.98, price to sales is 6.68, 7.29, PB ratio is 10.65, 4.3. Oh, this one is overvalued, so we don't need to worry about it. And then cash flow is 44.14 and 86. You know what's weird? What I noticed is that the PE ratio is actually really high, but I think this is actually overvalued when you compare it to the industry. So for the PE ratio, because investing.com is compared with other biomedical companies, so in terms of the PE ratio and cash flow and so on, it's better because it is compared to biomedical companies, and biomedical companies generally don't make money. So what does it mean? It means that there's a potential increase of 72 to 95% here, which gives you $314 to $350. So $315, which is here, and $356, which is up here. So you can see that this is not going to be immediate, and I think it will take around a year or two, maybe even 3 years to get to this price range again. Okay. And in the short term, I think you can easily get to $199. $199, which is right above here. Fantastic. So right now, you're at the 3rd week of the bottom. You can see that the ratios are undervalued when you compare to biomedical companies. You can see that the business model is very strong. There's a lot of growth. The CEO is setting really low expectation for Q3. You can see that the CEO is actually buying the stock. You can see a director who doesn't really know the company is dumping the stock. And right now the balance sheet is very strong. It's growing in China, but it's really dependent on the economy of China, because if people don't have money, then they're not going to spend on Invisalign. And right now they actually beat the expectation for the analysts, and the decrease is mainly because of this comment that there's some uncertainty in China and some slower growth in China. Okay, great. And I think Invisalign is a mature business, in my opinion. Let me think. Okay, let's look at options. I think this is a great stock. And I think you can definitely invest in it. So then the question is really just when and whether the bottom is forming it. So let's see if you will have stock options that is long enough. So in this case, because we think that it will take a while for the market to go back up, I think the bottom will take a little bit of time to form. Then we definitely want to be more conservative and use the longest option possible. So let's see if I have it. Option calculator. Oh, great. It's right here. So again, I don't know if you have gotten to the option part yet, Nancy, but there's an option calculator which I just pulled up, and you can use that when you are analyzing a line. So we're just waiting for this to load. Okay. All right. Meanwhile, so when you get to the option module, then you want to change this to calls. You want to change this to all moneyness, and you can click go. All right, cool. So let's think about where is a good price to put your strike price in order for you to be safe. And I think that right now the bottom is still a little bit too early, and because the Bollinger Band is expanding, chances are you can get a better price. So I think if you choose a price of, and right now it's below the blue line, so if you choose a price of around 142, below 150, maybe 150, then I think you'll be pretty safe. So now why did I choose 150 as a price? Because this is a psychological support. 150 is a round number. It's a key milestone. So then there's going to be a lot of support. Maybe price will touch it and then bounce back up. Now, given how strong the financial performance is, I don't think it's actually going to break through 150. So another reason to put your strike price either at 150 or below it. And I think that if you choose 125, that is really conservative already. So I think depending on your risk appetite, just choose a price between 150 and 125. This is a good range. All right. So let's see what options are available for Align. So obviously, if I look at the longest option right now, which is January 2021, and I think if you wait around 2 months or so, 1 to 2 months, you're actually going to get the 2022 option coming out really soon. So we'll see. If you invest, with your first 1/3 position using the 2021, you might be able to invest your second 1/3 and your third 1/3 using the 2022. Okay, all right. So right now, we're talking about a price range of 150 to around 125. So I think chances are you can do 145, 140 to 135, these three. That would be pretty safe. And I think that depending on the market in the next 3 to 6 weeks, you might get a price that is closer to 165, maybe even 150, 160. Yeah, but I think the odds are around 30%. So, okay, let's look at the option. So, like I said, I think you're only halfway, maybe 70% through the program. This is near the end of the program. But I'm just doing this for you so then you can start evaluating this opportunity. Now, of course, you want to use stock to buy it. It's totally fine. It's just that if you use option to buy it, you can multiply your profit. So right now the price is 183, 183, 183, and strike price we want to evaluate is 145. We'll start with 150, 145, 135. I'm just going to skip 140 and 130. And then the option price is going to be the mid point of their bid and ask. So in the later modules, I actually teach you how to enter a stock option and exactly the strategy to use so then you get a cheaper price. So just go through that module and you'll know how to enter into the market. So 150 is around 53. Okay, I'm just going to be very exact here. Divided by 2. So 53.7. All right. And then the next one is plus 57.8 plus 60.2 divided by 2. And then 135 is plus 65 plus 7 divided by 2. And then plus, last one is 67.7 plus 70.2 divided by 2. Okay, formula error. Fix that. Okay, good. So these are really the options we're evaluating, which is your strike price is around this range. And I think that is pretty safe based on the information to date. Okay. Now, all right. So let's think about this. So you'll see that the interest kind of ranges. And if we look at the break-even price, it is all around 200 to 205. So 200 and 205, which is right at the blue line. So your break-even price is somewhere here, 200 and 205. And I think that is super doable. So then you can get to hold the stock for a year and 3 months. So when you get the 2-year option, which is coming up in a couple of months, then I think it's going to be up here. So I think either option works. And let's look at the price to double your money. In order for you to make 100% return, it needs to be around $270. Now, if you choose the first one, it's actually $260. And if you choose the 145, it's actually $272. Huh. Okay. Interesting. So don't buy the 145 one. So $260. Okay, which is right here, which is just a red line, and I think that is really doable in a year and 3 months. I think there's like a 80% chance of reaching this level if I give you a year and 3 months. So that is 15 months. Yeah, I think so. And it will probably reach there early. And there's the support from the CEO too. Okay, so this is quite a good pick. And I think what you want to do is you want to separate your position into 3. So in order to secure the price, you might want to enter 1/3 today, maybe 2/3 today, depending on how comfortable you are with the bottom. Now, to be honest, right, if you're entering today, then definitely you are on the early side, and I think the bottom will take around 6 to 12 weeks to form. Maybe it will even form a W. So I think, let me just change the color here, so then it shows that you're entering. And you'll choose a 270 to 260. Even if it is 270 to 260, it's not differing by that much. So yeah, so I think you're fine choosing a strike price of 150, maybe a little bit lower, 140. So you don't want to choose the one that is 145, because when you do the math, the price to double your money is actually higher, so you might as well choose 135 or 130. Yeah, so don't choose this one. That's bad. Okay. All right. So afterwards, your strike price is going to be somewhere between here. So we narrow the range down. And if it goes down a little bit more, that means you're getting a cheaper price, then you can try to enter at 166. So I think that is a fantastic price if you're able to enter into that. So save some money so you can enter into this area. And yeah, I'll even save some money to enter at 155. And it's just because you're early. I think that there's quite a bit of opportunity to enter at a lower price. Now, if you enter next week and it goes up, then voila, you're making money, and you might even be able to exit early and keep like 50-60% at around 240 range. Now, chances are, if it goes back up like right away next week, in the next couple of weeks, I don't think it's going to break through this red line. So I think, I don't think it's going to break through this red line. So you want to exit before it hits the red line if it goes back up really quickly. Okay? So let's think about this. All right. Yeah. So I think that is a good plan. So make sure you track it on a daily basis to see if you can get a cheaper price when you enter, let's say, your second third or your third third of your position. And yeah, then just wait. And if you wait a couple of months and when you check there's the 2022 option, then you can use that one too. So that's good. So I think there's a very high probability you will enter, so I'll move this up. So this is definitely one of the stocks that are more ripe for entry. So I'm going to move it up. Right now I'm looking at Square. I'm looking at Netflix. So I think I'm going to put that above it. I'm looking at Intel because some of my students are also looking at Intel. So okay, yeah. All right. So that is a line. So next one, Corning. Okay. Corning. So again, you'll see some mixed signals here. Let's see. Let's look at the stock price first. So Corning right now is near the low. Right now it's at the blue line, so that's fantastic. It's on a discount. And from my memory, I actually did an analysis on Corning before for another person, and I think that it is influenced by the China trade war. So again, I think Corning and Align are both influenced by China, so you just got to develop a view on what you think about the China economy and what do you think about what's going to happen between Trump and China. Okay, all right. Executive Vice President, dumping it. So this transaction basically nets out each other. These two put together is a sell, okay? Someone is getting rewarded a lot of option, the Senior VP for Human Resources in mid-July, and also Edward, the controller. So that is very important. This guy is an accounting guy. All right, so let's take a look. So if I look at it here, mid-July is at $33. Wow. You see it? $32. So you can see that these people are being compensated when the market is high. So I think, unfortunately, their stock option is underwater now. Okay, and then right now you see that the People in Digital Executive Vice President dumped $6 million at $31, again at a high, so which is right in the middle of it. Okay. And you can see that there's a lot of derivative being bought in early June, mid-June, right here. I think that might be a short. So these are all shorts, I'm going to assume, because it's at a high or this person is losing a lot of money. And then afterwards, you see a bunch of sell in mid-April at $34, which is also at a high. Okay, so what this means is that you see one guy cashing in the stock options. You see the accountants and the human resource guy are getting awarded stock options, but then now they're underwater. You actually don't see anyone selling it anymore for the last 2 months or so. And you see that people are selling it and shorting the stock when it was really high at around $30-something up here. So it's not a great signal where you see people buying it and going crazy and buying it, but it's a signal where people are not selling it. So that means management knows that the stock is cheap, so they don't want to be selling it when it is cheap. So again, I don't think you gave me the reason for why Corning is decreasing, so next time remember to put in the reason based on the news research. All right, cool. So you see that the company is growing 9 to 11 billion revenue. And in terms of net income, you see that there was a negative net income here a year ago, which is 2017. And you'll see that right now it is 1 billion in net income, which is still a lot lower than what it was in 2014. And that is kind of weird. So if you look at the gross income, it's actually increasing. So what's really happening is in here If you look at unusual expense, oh, this is overstated because you see that there's an unusual expense of $1.5 billion. Okay, let's think about this. Let's think about this. So we want to exclude that. This is overperforming by 1.5 billion. So if we lower this by 1.5 billion, what you're really getting at is just 1 billion. Okay, so why is this one so high? 3.7. Income tax 3 billion. So again, that is a gain, so to get back some income tax. And let's take a look. The pre-tax income is already 3 billion. So interest is fine. EBITDA after unusual expense. Oh, that's 3 million. Sorry, I read it wrong. So it's not income tax. Other operating expense? Non-operating income or expenses. This one. So again you have another one-off non-operating income and expense. So this is again overstated by 2.7 billion. So if you take that down, that's actually 1 billion. So this is 1 billion, 1.3 billion, 1 billion. Once we take out all the weird stuff, this is negative half a billion, and this is positive 1 billion again. And this time, you actually don't get a lot of unusual expense. And yeah, okay, all right. So the financial performance on a net income level is not really that great. It fluctuates a lot, and there's a lot of noise in net income. That's basically the summary. Okay, all right, let's look at quarterly financials. So quarterly financials, you'll see that right now is still growing when you compare to last year's June. And if you look at net income, wow, it's actually really low. No wonder they went down so much, because the net income for quarterly basis is really bad. Okay. Let's see. So EBITDA after unusual expense is negative here. There's 94 million of unusual expense. So this is really because there was unusual expense here that made it positive. So when you think about it, this company is actually not doing that great. Because a large part of it is like unusual expense. So it's actually not making that much money. This might be foreign exchange or whatever. Okay. So it's not as stellar as a line, per se. Okay, so cash. Cash, ooh. This is another bad sign. You can see that cash is going down from 6 billion to 2 billion. And yeah, 6 billion to 2 billion. So when I'm looking at debt, I expect that there's an increase in debt. Inventory increasing, that's fine. I think this increase is actually faster than the increase of revenue. So it's not exactly a good sign. So net property, plant, and equipment, you'll see that is increasing. That's fine. Intangible assets, it seems like there's an acquisition. So I think you need to know what acquisition Corning made. You can just Google it and then get comfortable to whether the acquisitions make sense. Yeah, so for the interest of time, I'm not going to do that. So here you'll see that short-term debt, like I said, is going up because you can see that cash is going down here. So cash is going down here. So my question is, given that there's so much revenue, net income is kind of up and down because there's a lot of unusual expense. And when you take out the unusual expense, they're actually not that profitable. They're making $1 billion a year, and it's not really exactly growing. So, and you can see that they're using more debt to increase their leverage. So right now it's 13.6 billion, and the equity is around 13.89. So it's still almost 1-to-1, a little bit less than 1-to-1. So I think that is fine. It's just that the income statement bothers me. Because there's too much unusual expense here. And that basically contaminates the net income you see here. But you can see that from a revenue and gross income perspective, it is actually growing. And right now, you can see that people are not selling it, which suggests that this company is actually forming a bottom. Okay. Let's take a look to see if there's any news that can help us. Oh, when we can look at the ratios too. So June quarter decline, blah, blah, blah. See? Due to non-cash mark-to-market losses associated with currency hedging contracts. So basically, they suck at currency hedging. See, Forex is difficult, guys. Don't invest in Forex. Revenue is still growing. Segment results. Increasing. So gross profit decrease. So their cost is higher. Yeah. So I think long term, this company should grow. I think it's coming down to something actually very simple. It's how well do you know the Corning business? So undervalued. So they're actually not generating positive cash flow, which can be concerning, and undervalued as well. Okay, so I think the only meaningful one is this 1.84 to 2.9, which we can do a quick option calculator here using price to sales, right? 1.84, 2.9. Okay, and this one is 27.8. So you, based on this, it's going to go up to $43, which I think is quite aggressive. $43. That's going to take a while. Okay, all right. Let's think about that. So, Insider, you see that they were selling at $30-something, $31, but not at $20-something other than one person, I think. For ratio analysis, you can see that it's undervalued generally, but then you'll see that the gap is quite wide, so it'll take a while to go back. It will take a while to go back to that level. For income statement, you see that there's a lot of noise in the net income level because of unusual expense, and they're losing money because of currency contracts. So if there's a lot of instability with currency, then they actually perform worse. For balance sheets, you see that their cash is decreasing. I think that is all right. They're increasing their debts and increasing their leverage, but the debt to equity ratio is still 1-to-1, so I think that's fine. Not a big fan of how the income statement look, but I think right now the stock is considered to be cheap, and right now you're at the third week of the bottom. So I think you have a little bit of time. You can see that the bottom here has been forming for quite a while, and you can choose to enter here if you have a strong understanding of Corning, and you have a strong understanding that Corning will grow. Because to be honest, I don't think I know this company that well to be able to comment on its future growth plan. And if you're able to comment on it and you understand that it's a great company, then you can enter 1/3 today, enter 1/3 here, and you can actually save a little bit of money of entering 1/3 at around 26, basically the previous bottom, 26.5 to 26.5 to 27. So something like this And then where you would put your strike price is actually, you want to be a little bit more conservative and put it near $26 to $25, okay? So I think this is a good place to place your strike price. So obviously you can hear my tone compared to an Align Technology. I think Corning is less confident investment, in my opinion. And obviously there's more noise, but if you're looking to invest in the next year and a half and so, then I think it's okay. You can decide that yourself once you combine what I said with your understanding of Corning. So I think your strike price, if it is in this range, between 26 to 25, then I think you're okay. All right, then for the option parts, I'll leave it to you. Once you go through the option module and use the calculator, then you can apply the same steps. All right, Daniel, Cisco. So Cisco system, great trend, dropping, but I don't think it's at the bottom yet. Bollinger Band is expanding. So with that being said, let's skip straight to insider analysis. Because we talked about the trend and the company earlier. Now, one of the questions I have about Cisco is it actually growing? And do you see that there's a large market for Cisco? And right now you can see that there are people selling. Now, the amounts are not that big, but in August you can still see that people are selling. Actually, nobody's buying yet. And you can see that the range is between $55 to $47. Now, 47 is really small amount, so $55 to $52. So 55, which is at a high, so that means management is smart, to $52. So that means it's still in the upper range, and basically people stop selling at the lower range here. So $47, which is right at the price point we are at today. So there's still a little bit of selling, but you can see that it has been reduced by quite a bit. So you can see that there's a lot of sale here. And you'll see that some people got awarded option back in May, but I think they are getting awarded at a very high price. Yeah. So these options are underwater now. All right, cool. So again, this signal is an absence of selling, but it doesn't mean anyone is buying yet. So again, I want you to think about whether the company is actually growing. So 2015 to 2019, you'll see that basically the sale is not really growing that much. It seems like there's an overall growth of 5% across 5 years, because you can see that there's 5% growth in 2019, but then in 2018, the revenue is 49 billion. Here it's 41 billion. So it's not even that much difference. So we can just take this 5% and divide it across 5 years. So it's like 1% a year. Okay. Gross income. Again, this is a kind of like a mature market, kind of like Coca-Cola. And you can see that net income is growing because they're optimizing their costs, probably. And unusual expense, I wouldn't worry too much about that. Yeah. So they're optimizing their costs and improving their net income. So this is a pure cost play. Now, what's interesting for Cisco system is that they sell routers, right? They might do more than that, like security or whatnot. But essentially, there's a company called Huawei in China, took their modem and basically dominated it, China, because they steal Cisco's technology. So if one of your arguments is that Cisco is going to expand into China, that is invalid because Huawei has dominated that segment already, and I doubt Cisco can expand into China. All right, cool. So cash, decreasing in cash, probably like increasing in debt. So inventory, so they're managing their inventory better because their revenue is basically the same, but there's less inventory. Net property, plant, and equipment, decreasing, so they're not really investing in net property, plant, and equipment. Again, that is probably a good sign because they're optimizing, or is because the company is starting to struggle, but I don't think that's the case. Intangible assets, I think there's going to be acquisitions for Cisco, so I think You just need to research on what those are and make sure you're comfortable with them. I do know that Cisco does a lot of venture capital investing, so then you might get a lot of companies that they invest in because they're based in San Jose. All right, moving on. So short-term debt, like I said, is increasing. So total liabilities and equity, you'll see that right now, this is actually, it went from 1 to 1, you see it here, to 2 to 1. So you can see that it is increasing its leverage, so then it reduces the amount of equity, and then that pushes the stock price up. When you look at the company itself, this is actually what Apple is doing, and this is why I'm not investing in Apple yet. What they're doing is they're taking a stable business, kind of like a telecom company, adding debt onto it, reducing the amount of equity, so then whatever money you're earning on a net income basis will be greater in terms of percentage. Okay, I think I made it too complicated. They're reducing the amount of equity in the company, so then the return is higher from an investor point of view because the company is taking on more debt, and that drives the stock price up. But when you look at the company performance itself, like the net income, the revenue is actually not increasing. They're optimizing cost, they're improving net income, but revenue is actually flat. So what I foresee is that in the future, they'll continue to take on more debt and increasing leverage so that they can drive the stock price up. And that's really what they're doing, because Cisco right now is a very stable business looking at the revenue, and basically I don't think there is much room to grow for Cisco. So yeah. So if you have another view for Cisco in terms of the growth, that is fantastic. And if you believe that Cisco can continue to grow into a new market or new product, then that is definitely an edge that you know you have, so that you might act on it. So in terms of technical analysis, coming back to it, people are selling at this part, which is fine. And right now it's back down. So the next area you're looking at is really at around $40, maybe $45. Chances are somewhere between the red and the blue, because previously it does dip below here. And right now it doesn't seem like the market is forming a bottom yet. So I think the Bollinger Band is expanding, and you will actually get a price that is in this range. And at this point, because the trend is pretty strong, so I think you can aim for a strike price, Daniel, for below $40. I know you're not in the program yet, but yeah, essentially you can aim for a strike price below the blue line here. Yeah. Okay, finally, let's talk about Activision and Blizzard. So this week, I think I entered into Activision on a Tuesday, and afterwards, just one day after, it went up. So now why do I enter into Activision? I just want to explain my logic so then you guys can understand what I'm doing. So Activision has been forming a bottom for many weeks. In fact, this is a very mature bottom. And let's say we start in late December. Just for simplicity's sake, we'll start in January. So this bottom has been forming for 9 months. That's why it's so important to be a long-term investor, because sometimes a bottom can form for months. And I bought at $44 and I bought again at $43. So I thought, well, the bottom has been forming for like 9 months now, and I know that the stock price is kind of inching upward. You can see kind of like a U shape here. You can see a U shape. And you know that the Diablo problem is kind of gone. You can see that the sale for Bungie is kind of gone. And you know that they're launching new games. And when the stock price is inching upward, that means it's getting ready to burst up. Now, I don't know if it is clear to you guys, because it's really clear to me. So you can see that there's a horizontal here, right? And you can also see that the stock price here is kind of inching upward. Now, it's not perfect because this is more art than science. So this is forming a triangle. But essentially, you just see that the stock price is inching upward ever since February 2019. And this represents that a very high probability the stock price will burst upward, given that Activision has been an uptrend for a long time. Okay? So when we invest based on these bad events, you know, the Diablo problem, the loot box, the gaming industry, and the sale of Bungie, Activision is ready to go up again. So I wanted to enter my last 1/3. And it's important that it's the last 1/3 because when you look at these three lines together, the average is really just $45. And I'm just entering in the average of the bottom. So I know that my price is still great. And that's why my average stock option price is still $13, which is quite cheap. And once it went up, then I'm all in the green. So now, in the next couple of weeks, it's just all a matter of waiting for it to break through. Now, I think this time, given that the bottom has been forming for 9 months, Christmas is coming, there's going to be a boost in sale. I think that it is actually going to break through the red line because the red and the blue line are really close. And given the amounts of momentum you see here, I think it is actually going to break through the red line. Now, having said that, my option is still valid for another year and 3 months. So I'm not in a hurry. So that means I'm just waiting for it to hit around $60, maybe $65 to earn 100% on this investment. Okay, so that is really my logic for Activision and Blizzard. So now it's just a waiting game. And right now it has jumped up to $50. So it's out of the entry zone. So don't enter into it anymore. So for those students who have already invested into Activision and Blizzard during this range, congratulations. You're making money. It's just a matter of waiting to see how much money you want to make from the markets. So I think right now, using my options, I'm up 33%. So we'll see if we can get more. So Alibaba, 3M. So 3M is also another stock that I've been entering. Again, I think I'm a little bit early because you can see this pin bar. So I'm really saving some money to enter at around 150 range, which is quite aggressive. So I think during this week or last week, I entered into 3M at $160 and $155. So right now my average is somewhere between the two, so $158. And if you look at it, I don't think 3M is going under. I think the trend for 3M is really strong, and I think that the trade war is affecting 3M quite a bit, so you want to be long-term for this investment for sure. Oh my God. I'm just trying to fix the scale so it looks better. So right now you can see that the bottom has started forming since May. Now I think this bottom is going to take a while to form, and because of the sharp drop here, so I'm prepared to wait like 6 to 12 months before I even look at exiting. Now if it goes lower, I'm probably going to enter again to bring my cost of investment down. NVIDIA. So I think this one is getting ready to burst up as well, but it's just a matter of time. So just watch your expiry dates to make sure you have sufficient time when you're holding on to NVIDIA. Okay. Tiffany. I think Tiffany is the stock I'm also looking into. I wanted to form a better bottom first before investing into it. But as you can see, the trend is not very strong, so I'm not exactly super into Tiffany right now. So I'll just bring it down. TD. So I think TD is actually quite an interesting stock that I want to be investing into. It's actually TD Canada, and that's also the broker I'm using. So in terms of a strategy point of view, I think RBC and TD are the two best banks in Canada. So I'm quite confident in their banking services. And right now you can see that it is dropping. But I haven't really decided that I want to invest in it yet. But it's one of the ones that are on my radar. But if you compare that with Align, I actually think Align gives a better discount and is more ready to invest. Intel, you can see that right now Intel has gone above $47 again. So some of the students have entered during this range. So if Intel ever dips below 47 again, I think you can enter. Now, looking at the Bollinger Band, you can see that it is actually closing in, which means the price is going to start ranging. So you can save some money. I think you can get in at around $45, $46. Now, if you're lucky, you actually might be able to get in at around $43. But I think the odds of that happening is around 20%. Netflix is dropping. So if you like Netflix, you love Netflix, and you think Netflix will survive in the midst of Amazon streaming services, Disney streaming services, Fox streaming services, everyone has their own streaming services now, and Netflix will survive in the midst of all this competition, which is actually one of my biggest struggle when it comes to investing in Netflix, then you can aim to do your research between $290 to $250. So I think this is a good price range to enter and start doing your research today. So Tiffany, we talked about it. Square, I think Square is fantastic. It's actually going down. A lot of people are dumping this stock in terms of management. The biggest problem with Square is that it's actually losing money, and I'm not a big fan of investing in stocks that are losing money. So if it suddenly dips below like $39, I think I might be going into it. But losing money is not really my forte. All right, Tesla. Again, Tesla I think is a great stock. And right now it's at a mid-range and it's forming a W. So I think if it comes back down to around $200, it might be an attractive investment. Now the trend is not very strong in the short term, but then if you look in the long term, you'll see that it's fantastic. So I think it is definitely a long-term investment. Chances are you don't want to be using stock options on it because the CEO, Elon Musk, says random stuff on Twitter all the time. So Aritzia right now is kind of just hovering in the bottom range. If you want to add a little bit more, you can, but I would just wait for it to go up. So Boeing, I think this stock went up already because they're ramping up their production for 737 MAX. And this should impact the airline stock that I'm holding, Southwest Airline, and I think that Southwest Airline is ready to boost upward in the next 6 to 12 months. Okay, so that is pretty much it. And if you have any questions, submit it through the forum and I'll answer it next week.